Hello guys, it's Max here from the Investing Hub and welcome back to our YouTube channel. Today I thought it'd be a very good idea to post a vlog focusing on an indicator, but this indicator is more what the institutional money focus on. Of course, as retail traders, if you open up TradingView, there's several indicators that we can use to help predict future movements in the market, such as an RSI, EMAs, moving averages, and much more, trend lines, support, resistance, etc. There's so many to choose from. But what I want to do, I want to take you over onto my computer screen, and this is where I'm going to be showing you an indicator which is accessible to all of us using the internet, which a lot of the managed money firms, the institutional, the banks, the hedge funds use on a daily and a weekly basis to help them predict future price movements in the market. So if you're new to trading, a lot of you will not know this, and that is that many hedge funds, banks, and managed money firms, they use something called the Bloomberg Terminal. Now, if some of you have studied finance at university, you may or may not have had access to a Bloomberg Terminal. And if you have, like myself, they are fantastic. They give you data which you just cannot find online. And some of the data that the Bloomberg Terminal provides to you is inflows, how much money has gone into a particular asset, how much money has come out, and much more. And today, that's kind of what the subject's going to be on. It's going to be on the inflows going in and out of any particular market. And you may be thinking right now, well, hang on a minute, is this just a sales pitch from Max? Is Max, working alongside Bloomberg? Is he trying to sell us a Bloomberg Terminal subscription? And the answer is no. I have actually gone onto their website. I filled in my details, and I do actually hold a subscription to the Bloomberg Terminal, and I pay $55,000 for 2 years. It's roughly around $25,000, $26,000 a year, but you have to get a minimum of a 2-year subscription. So it's very expensive, especially if you're someone who's new to the world of investing and you're just basically tipping your toes in, trying to see whether trading/investing is for you. So to pay $55,000 straight up is just a big no-no for most of you watching this video, and that's completely understandable. I would say that 99% of other traders are in the exact same boat as you. But in today's video, I'm going to be showing you guys at home how you can access very similar data but for completely free. So the first thing that you'll need to do is visit a website which has an economic calendar. Now, many of you probably don't know what an economic calendar is, but if you go onto investing.com, again, this website is completely free of charge. I have no partnership with investing.com, but if you go under their news section, you will see this in their menu section. It says economic calendar. And what we're going to do, we're going to go onto that and we're going to click it. And that's when it will bring you to this page here. Now, this is what you call an economic calendar. It basically contains all of the economic data points that are going to be brought out within the next 24 hours. Also, you've got the option to see what's due out tomorrow, next week, this week, etc. So it's, you can have a little play around on this site. For example, if I click on tomorrow, it's telling me that tomorrow morning, the GDP, so the British GDP figures are due out in the morning. So, this is what it's kind of used for. And what's very interesting is that every Friday at the very end of the trading session, so this is 30 minutes once the trading session has closed, you have a series of data releases which come out. And these data releases are marked down as CFTC. And as you can see on my screen right now, there's so many of them. And what I've really focused on is the US ones. And if we just click on one of these, for example, so let's go on the gold one. Let me just really quickly read to you what the description of this data release is. So if I just zoom in and I highlight this text that I'm about to read to you. So the CFTC report provides a breakdown of the net positions for non-commercial speculative traders in US futures market. All data corresponds to positions held by participants primarily based in Chicago and the New York futures market. The commitment of traders report is considered an indicator for analyzing market sentiment, and many speculative traders use the data to help them decide whether or not to take a long or short position. You will see once you arrive on this website, there's it will come up saying source. So if we go and click on this link here, it will take us through to a website which is the Commodity Futures Trading Commission. Now, this is a website set up by the US government. And if we go down a little bit, you will see under the gold, for example, so I'm going to be focusing on gold, on the gold markets here, but it does have the S&P 500, the energy markets, etc., the Dow, the NASDAQ. But yeah, as I just mentioned, we're going to be focusing on gold for this particular video. So we want to go on the long format, and it will take you through to this page here, which looks very complicated. I think that 99% of you, if you arrived onto this page, you'd probably click off it within the first 30 seconds because it just looks like a massive headache. And I agree. But on here, we have several different markets, and here is the gold one. So you just have to try and find out. So for example, here is silver. There's platinum, but what we want is gold. And what's really important is that we come to this section here, which is called managed money. Now, this report tells you how many positions have been added, whether it be a long position or a short position, because it's very important to understand that hedge funds, they will never just be long or short. They won't just be one or the other. They hedge. Hence why they're called hedge funds. So they'll have X amount of positions in short and X amount of positions as long. And what they're constantly trimming either their short or long positions, completely depending on the macro environment. And what's important here, of course, this report comes out every Friday. Don't forget that. So it's very important that the last report was on the 14th of March, 2023. And this, of course, is the report from the 21st. So you really want to pay attention to this middle line here. And it tells you how many positions, either long or short, were added throughout the week. So it's very clear here that hedge funds, the banks, etc., they have cut their short positions. So that means that they've trimmed their short positions and they've added to their long positions. So this is very bullish, which means that the hedge funds, the managed money firms, are predicting that gold is going to probably go higher. They've increased their stakes in their net long position. So, this is something that I look at every single Friday. And as I mentioned, this is posted, after the market closes on a Friday, when most people are probably thinking, hooray, it's the weekend, it's time to go down to the pub, the bar, the restaurant, go and spend some money, go and celebrate, where actually, in my humble opinion, this is probably the most important data that comes out on a weekly basis. And many traders don't even know that it's even out there. So this is definitely something that I would recommend on visiting on a weekly basis, is seeing what the managed money firms are doing. Are they adding to their short positions? Are they adding to their long positions? And in this particular case here for gold, we are seeing a huge amount of net longs being added and a big amount of net short positions being cut. And if we just quickly hop over to the gold markets and see how gold has performed as of recent, we're starting to see a huge incline here for the gold prices. So this really does fit well with what this report has showed us, that, the managed money firms are adding to their net long positions. Whilst we're on this subject, I really wanted to draw your attention to another indicator which I use, which many traders are not familiar with, and it's called the AAII Sentiment Survey. And I use YCharts. YCharts is a very good website that I use. It's kind of like a cheaper version of the Bloomberg Terminal. I'm not a paying customer here, but you can access some of their charts for completely free of charge. So I definitely recommend using it sometimes if you're just looking for some interesting data on any particular asset. But if we just zoom out quickly here, this AAII Sentiment Survey is very similar to the VIX. It basically tells us how much fear is in the market. So right now on your screens, as you can see, the AAII Sentiment Survey currently showing a reading of minus 27.93%. And history will tell you that this is actually quite bullish, because every time that this reading is under 20%, it historically has offered you a good buying opportunity. And it's the exact same. When the market becomes a little bit too frothy, meaning that it's perhaps gone up a little bit too fast, then you will typically see AAI sentiment survey at around 40%. So here is a great example. In April 2021, we had a reading up at 36.51%. And as you can see, since there, we have declined significantly. And, you can just look at the S&P 500 and the NASDAQ's performance since then. The market has come down a lot. So right now we have the sentiment survey, which is way below that minus 20%, which is typically and historically a good buying signal in the market. So I'm actually feeling pretty good about the market right now. It's telling me that investors are very underinvested. And if we did get a small amount of bullish news, then that could potentially lead to investors feeling that they are underinvested, and a very large amount of money could flow into the market. And again, that's when I like to look at the CFTC reports. It shows you evidence that the managed money firms are adding positions, whether it be net short or net long. So I just wanted to kind of come on to YouTube today and share this with you all. I think that many of you will benefit from this. Whenever you invest in any particular position, you really kind of want to be on the same side as the big managed money firms, because ultimately they are the people, or they are the organizations that are going to move the markets. They have the firepower to invest X amount of money into any particular asset and to really move it. So by looking at these CFTC reports, it's what's really going to help you kind of be on the same side, be on the winning side, and follow the same footsteps and investment decisions as the big managed money firms. So I hope that you really enjoyed today's video. I hope that you've learned something. More importantly, as always, I will continue to post vlogs every Friday at 1 p.m. BST time. But thank you very much for watching today's video. Please hit the subscribe button, especially if you learned something today. And I look forward to seeing you all next Friday. Thank you.